Hey everybody, John Bowens with Equity Trust Company here. In this video training webinar, we will explore what we refer to as the 5 self-directed real estate investing success killers. Most importantly in this training, you will learn how to avoid these potential pitfalls and errors. Now, how do we come up with these 5 success killers? Well, this is from years and years of experience in working with tens of thousands of clients across the country. We're processing thousands of real estate transactions on an annual basis. And so we've learned a lot on how to properly approach self-directed investing and what causes challenges and issues for individual investors. And we can share those stories with you. In this training to describe these success killers and how to avoid them, I have a client case study which will highlight how a real equity trust client avoided the common pitfalls, completed his very first real estate transaction with a self-directed IRA, netting a $45,000 tax advantage profit for a 30% return on investment in just 14 months. Now, before I dive deeper into this story, and his name is Mark, let me tell you what the 5 success killers are, and then we'll just dissect each individual one. Number 1, not having the self-directed IRA up and running in advance of finding properties. Number 2, lack of understanding the process or paperwork involved with real estate investments in a self-directed account. Number 3, not having a firm grasp on the rules surrounding self-directed real estate investing. Number 4, not knowing how to maintain the property in the self-directed IRA or other self-directed account. And last but not least, number 5, not having the right resources or tools to conduct the transaction. Now, before we jump into Mark's case study, it's important to understand that Equity Trust is here to provide education and information. So it's important for me to mention the disclaimer that we're not here to give you tax, legal, or financial advice. As a financial services institution, we have the ability to provide information and education. But again, it's important that you're working with your own CPA, accountant, or attorney to perform the necessary due diligence on behalf of your investments in your self-directed investment accounts. So let me introduce you to Mark. And once you hear his story, we can then apply the success killers to his situation and how he avoided them. Now, I had the privilege to interview Mark on a webinar, and he shared his story in great detail and how he did the individual transactions. So at the end of the webinar, I will tell you how you can get the full 60-minute training where we interviewed Mark and he shared his story and how he dissected these 5 success killers. Now, what I'd like to do is show you a quick soundbite directly from Mark so you can hear from him his experience with looking into a self-directed IRA and ultimately how he avoided these 5 success killers. So let's have a listen.
There was a reason why Equity Trust, or in addition to real estate investments. And the real reason is diversification. I needed to diversify my portfolio, not to have all your portfolio in stocks, specifically knowing full well what has happened in the stock market over the last 60 to 90 days so far for this year. It doesn't look well in the stock market. It's up and down, up and down. So I was looking to diversify. Question was why and how did I get to Equity Trust? I actually, after retiring, I moved some money to self-direct purchasing stocks, and the folks at E-Trade that I was with suggested and gave me Equity Trust name, and I did some research on Equity Trust, and then shortly right afterwards, I moved money starting in March of 2017, knowing full well that I'd have some investment opportunities in the future. Then I had to go out and start finding some investments. The only regret that I've got, John, is that I didn't do this 10 years ago. If I would have known that this avenue was open 10 years ago, I would have jumped all over this, specifically when the market crashed. But I had money in a traditional 401k and IRAs, and I was not aware that this vehicle is even available. So thank you.
So now that you heard from Mark, let me share with you my takeaways from this. Number one, Mark retired at 60, didn't have a lot of experience, didn't have all the answers, but he knew real estate made sense for him, and he took action on starting to put the pieces of the puzzle together. He set up his account, funded his account, and got started. Number two, he was looking for diversification, as he was concerned about the potential volatility of the stock market. So he was looking to real estate as an asset class for the needed portfolio diversification that he personally desired. So now let me show you Mark's story. All right, deal number one. Mark first established and funded his self-directed IRA. That was step one. He got it out of the way. His realtor contacted him with an investment opportunity for a 4-bedroom, 2-bath property in his hometown of Charlotte, North Carolina. Now, the house was in a good neighborhood, but it had not been updated in many, many years. So Mark bought the house for $89,000, and it had an after repair value when he bought it of $200,000 to $215,000. So he knew it had about $45,000 to $50,000 in profit potential. He put $64,000 in repairs into the property, all of which were paid for from his IRA funds. He sold it for approximately $200,000, netting a $45,000 profit. Now, Mark tells his story in the interview and talks about visiting a local real estate investor meeting, a meetup group, if you will, where he found a contractor that could perform the necessary rehab. He hired this contractor to do all the work, and his IRA made payments to that contractor. And you're going to learn in a little while why that's important. All right, so first deal, he made $45,000. Second deal, simultaneously, Mark had an opportunity present itself when he was at this real estate investor group. There was a home builder that was looking for financing to acquire 2 lots, tear down the properties on those lots, and then build 2 new homes. And so Mark made a $125,000 loan from his IRA to that home builder. In other words, his IRA, the asset, was a promissory note. So his IRA made a loan, the borrower was a home builder, and his IRA, after 12 to 14 months, made a $74,000 profit. So $125,000 invested, made a $74,000 profit on that transaction. So in recap, between these 2 transactions over 16 months, he made $119,000 in net profit for around a 42% return on investment. All right, so now that you know about Mark and his story, let's apply these case studies to the 5 success killers. All right, success killer number 1, not having the self-directed IRA up and running in advance of finding properties. So Mark talked about establishing and funding his self-directed account in advance of making his real estate offer. See, the number one issue that I see folks have is that they wait until just a few days before they need to close on a real estate deal to set up their account and fund their account. Well, if you're relying or at the mercy of another IRA firm or 401k provider or 403b provider or TSP plan provider, wherever your funds are at now, if you're relying on that financial institution to send the money over to Equity Trust Company in just 24 to 48 hours, you're likely going to miss out on the transaction or have to delay the transaction because most institutions are not willing to just send money overnight. So you got to make sure that the account is set up and funded well in advance. Additionally, you have to make sure the account is set up and funded well in advance because if you need an earnest money deposit, like Mark needed an earnest money deposit, you need to make sure that earnest money deposit comes from the IRA. So again, very, very important the account is set up and funded in advance. Mark, when he shared his story, he talked about calling another financial institution. They said, hey, we don't allow folks to invest in real estate with a self-directed account. You're going to have to call Equity Trust. He reached out to Equity Trust. We were able to establish his account and help him fund the account from his current IRA firm's transfer. All right, let's move on to success killer number 2. Lack of understanding the process or paperwork involved with real estate investments in a self-directed account. See, I find a lot of investors, it has the appearance of being a very daunting task for them. But what you'll find when self-directing an IRA or other self-directed investment account, it's incredibly simple and easy if you leverage the tools at your disposal. And that's going to be another success killer that we're going to talk about. So it's important you're leveraging the Equity Trust systems, the Equity Trust tools. And what you'll find is when cash flow comes back into the IRA, it's a tax-sheltered account. So as long as you're doing everything properly, it's not necessary to go through any type of complex accountancy or tax reporting associated with these IRA funds. So Mark used our My Equity platform. This is an electronic system that allows investors to simply point, click, and process their real estate transactions on their own time. So here's how it works. Step number one, Mark had a property identified. He got the property under contract using the specific IRA titling, which is Equity Trust Company Custodian, FBO, as in for benefit of, Mark's legal name IRA. Again, that's Equity Trust Company Custodian, FBO, your name IRA. That's the titling you use, all right? Step number two, Mark logged into his Equity Trust account online. Again, this is called My Equity. He keyed in all the relevant information via this digital platform and requested the funds to be sent from the IRA directly to the title company for closing. Step number three, he rehabbed the property, hiring a contractor. To make payments to the contractor, as well as for taxes, insurance, utilities, all carrying costs, Mark used our online bill pay system. This system allows investors like Mark to make payments via paper check, ACH direct deposit, wire transfer. There's multiple ways in which you can transmit funds. Most importantly, regarding this feature, it's smartphone device capable. So think of it this way. Mark was able to meet with his contractor, be on site, get the contractor's bank account number and routing number, key it into the system, and then Equity Trust was able to transfer the funds directly to that contractor's bank account. All right, so simple, easy, if you will, secure. All right, step number four, Mark sold the property, of course. So at closing, all funds were returned to the IRA for deposit. So it's important to understand that when your IRA owns real estate for rehabbing purposes to resell for a profit or buy and hold, it's important that all money comes from the IRA for fix-up and repairs, and then all profits go back into the IRA. And that $45,000 in profit that went back to his IRA, that was tax sheltered, of course, because this is a self-directed traditional IRA. It's a tax sheltered IRA. So in recap, Mark leveraged the Equity Trust online system, My Equity. This system allowed him to seamlessly process the transaction from end to end, saving him time and also giving him the peace of mind knowing that his transactions would be processed quickly. All right, so success killer number three, not having a firm grasp on the rules surrounding self-directed real estate investing. And I find this is very common amongst clients that I work with individually. They say, John, I'm not ready to move forward with buying real estate with a self-directed IRA or making loans or investing in whatever type of alternative asset they're looking into because I don't understand the rules or it seems a little bit daunting to me. But what you're going to find is this is a very straightforward approach to investing. All right. Now, as we go through this process, it's important to understand that your IRA is a tax-privileged account, right? And so with those unique, very powerful tax privileges, I call it compounding interest in the absence of taxation. For those of you that have seen some of our YouTube videos or our Facebook Live sessions or other webinars, you'll hear this concept of compounding interest in the absence of taxation. It's incredibly powerful. And so as we are afforded this capability, what comes with that is responsibility. Using the funds for your own personal gain in the here and now is going to be an issue. And for all intents and purposes, these are common sense principles. So when investing with your self-directed IRA, there are certain types of transactions that are considered prohibited transactions, all right? And Mark knew about what these were ahead of time. So he did some of the research, he talked to Equity Trust in advance so he could learn what the rules were. A prohibited transaction can occur if you personally or another disqualified person engages in a transaction with your IRA. All right, so how can you create issues with your IRA? If you personally or another disqualified person transacts business with your IRA, you can create what's called a prohibited transaction. So who are disqualified persons? Well, it's pretty simple. Disqualified persons include you personally to your IRA, your spouse, lineal descendants is what the tax code says. That's children and grandchildren. Lineal ascendants, which are parents and grandparents. And then any LLC or other business entity that you own or operate is likely also considered a disqualified person. So the best way to think of it is anyone up and down the family tree is considered a disqualified person to your IRA. And disqualified persons cannot transact business. I'll define that a little bit more for you. Now, there's a few other details, of course. If you wanted to research this on your own, you could go to Internal Revenue Code 4975. But for all intents and purposes, you can consider any folks, again, up and down the family tree, your spouse, yourself, any business entity that you own and operate, a disqualified person. All right, but for those that are investing in real estate, this is giving you most of the rules that you need to move forward. Okay, so now if your IRA conducts a transaction with a disqualified person, you have now engaged in a prohibited transaction, which can result in your IRA becoming distributed. So these transactions can include, for example, you personally selling a property that you own to your IRA. That's pretty common sense. You can't do that. You can't take properties you own personally and place it into your IRA. You cannot directly purchase properties using IRA funds. Your IRA cannot loan money to your own business. So the idea is just like going back to Mark's example, right? Mark found a property. It was a third-party seller. His IRA bought the property. He paid a contractor to do all the fix-up and repairs, and then all the profits went back into the IRA. All right, as simple as that. You might be buying and holding real estate, like rentals. You might be lending money secured by real estate. Mark did that as well. The idea is you want to steer clear of engaging in those transactions with disqualified persons. We will mention at this point that there is the potential for you to partner your IRA with your non-IRA money or your IRA with other disqualified persons, and you have to do things properly in a pro rata way. And we have other training and YouTube videos specifically on partnering multiple IRAs. All right? But ultimately, back to the disqualified persons and the prohibited transactions, the last item to mention here is that Mark didn't do any of the work himself, right? Mark hired a third-party contractor to do all of the work. And that's important. The rule of thumb that's used in the industry is that you can do the desk work, not the sweat equity. So Mark was doing the desk work. He hired the contractor. He made sure that the property was under contract properly. He worked with the title company. He worked with his attorney. He worked with all members of his financial team, including Equity Trust. Remember, Equity Trust is a passive custodian. We're not here to give you tax, legal, or financial advice. But what we can absolutely do is give you some of the guardrails and the parameters, and then you can work with your other legal team members to make sure you're doing things properly. All right, so now success killer number 4, not knowing how to maintain the property in a self-directed IRA or other self-directed account. In one of the previous success killers, I talked about that online My Equity bill pay system. So Mark contacted Equity Trust, and one of our associates here walked him through our online bill pay system. It's incredibly intuitive and user-friendly. Mark simply requested the funds from the IRA to be sent out to his contractor for all expenses. So he used this online bill pay system, which you can do the same and send funds out via check, ACH direct deposit. It's a simple process. Also, if you remember from the Mark case study, he networked at a local real estate investor group. And so at that local real estate investor group, he found a contractor who ultimately was able to perform the rehab on that property. So keep in mind the networking effect and how that can potentially make an impact with your self-directed IRA investments. All right, last but not least, success killer number 5, not having the right resources or tools to conduct the transaction. All right? So first, Mark established his self-directed IRA. That was step number 1, right? So that was the first tool that he needed to make sure he put in his tool belt, was setting up the self-directed IRA. He didn't have all the answers to all of his questions just yet, but he knew that he'd be able to find the answers as he moved along. Next, he found a property and put it under contract. From there, he found a contractor to rehab the house. Along the way, Mark leveraged the Equity Trust service team to help get his questions answered and give him the peace of mind knowing that he's following the right process from a self-directed IRA perspective. So we encourage folks to reach out to us, use our online systems, and take advantage of all of the education and information that we have on our website, on YouTube. Make sure to become a YouTube subscriber so you can get all of our new notifications on new videos coming out. A ton of great content for you to learn more as you move along. But the first step of the process is get the account set up and funded in advance. Also, on his second transaction, which was the loan to a home builder, Mark talked about in the webinar how he scheduled a conference call with Equity Trust Company. So all three of us were on a phone call together. So Mark's attorney, Equity Trust Company, and Mark had a conference call. Remember, Equity Trust can't give legal advice, but Mark was able to get his attorney to be on the phone to give him the proper legal advice, and Equity Trust was there to provide information such as titling for the investment, right? Making sure that the lender was listed as Equity Trust Company custodian for the benefit of Mark's IRA. So Mark brought all of his financial team members together in order to ultimately make that transaction happen for him. So ultimately, at the end of the transaction, that loan, Mark made $74,000 in tax advantage profit. So at closing, that $74,000 was wire transferred back directly into the self-directed IRA with Equity Trust. And of course, that's tax advantage profit. All of that interest income, that $74,000 in interest income, will not hit Mark's 1040 in that year as ordinary income. And you could imagine if that $74,000 in profit was made outside of his IRA, so with taxable monies, and we applied, let's say a 20% effective tax rate. What's 20% of $74,000? That's how much in taxes Mark would pay on that $74,000 in profit. He did it in his IRA, so that $74,000 was sheltered from taxation. All right, so takeaway. It's important to get started in advance, as we had mentioned before, right? Success killer number one, not having an account open and funded. So if you're liking what you hear on this webinar, if this is making sense for you, you're somebody that might be active in real estate already and you have a retirement plan elsewhere, maybe you're looking for more diversification options like Mark, you can move the account to Equity Trust and begin self-directing. Again, important that the account is set up and funded. Now, everyone's in different situations. Some folks might have just IRA funds. Some folks might have an IRA for them and a spouse where they might want to partner those two accounts together. Some folks might have employer-sponsored plans like 401ks or 403bs or thrift savings plans or 457 plans. So you can reach out to Equity Trust and we can talk through those different types of accounts and how you could potentially get those accounts moved over to Equity Trust to begin self-directing. And if you don't have any experience in real estate yet, just like Mark didn't have any experience in real estate, he opened and funded his account, he got involved in a local meetup group, and then from there he was able to take action. So whether you're brand new or you're advanced, we have education and we have information to help you through that process. Now, I promised you at the very beginning the interview with Mark, the 60-minute training that we did with Mark. So what I've done for our guests on this webinar is I put together a kit. And this is called the Success Killer Escape Kit. All right, so if you want to escape, if you will, these 5 success killers, not make the mistakes that so many other people we've seen make, we have this kit for you. Within this kit, we have the 60-minute training directly from Mark. You're going to hear more from Mark on how he did these transactions with his self-directed IRA. We also have other resources within this kit that address the individual 5 success killers. So I want everybody to take advantage of this free resource. Okay, this is a free resource for everybody on the call. What you need to do is email us at webinars@trustetc.com. Again, webinars@trustetc.com. All right? Additionally, if you're somebody that says, hey, this is for me, I'm ready to take action right away, I'd like to establish and fund an account, email us at webinars@trustetc.com, and I want you to put in the subject line consult. All right? One of the services that we provide here at Equity Trust Company is we have associates that can reach out to you. And if you're somebody that's brand new in real estate or advanced in real estate, doesn't make a difference, we can have a one-on-one consult call with you to get you up to speed on a lot of the things that we're talking about here in terms of investing in real estate and alternative assets with self-directed IRAs. They can answer your questions and sort of provide a little bit of a framework for how this works. And then most importantly, if you say, hey, okay, let's move forward, they can help you with the paperwork and the process to get your accounts set up and funded. Now, what are you going to get out of this consult with one of our associates? Well, number one, as mentioned, we're going to get your questions answered that you have from this webinar. So if you took good notes, be prepared when our associate reaches out to you to schedule a time. they'll be able to answer those questions that you have. Number two, if you're ready to move forward, they'll be able to help you with that process again. But most importantly, last but not least, number three, this is a consultative process. So ultimately, what we want to make sure of is that you have an idea of what you want to invest in with the self-directed IRA before you move forward with opening and funding the self-directed IRA. So you have an opportunity to bounce ideas, and it's a solution-based call. Now, we're not here to be your tax advisor or your CPA, but on that call, we can create a solution-oriented environment so that you can paint your own picture for success and create a blueprint that's going to work for you. All right? So I encourage you to schedule a consult to get started. I encourage you to take advantage of the free additional training. Email us again at webinars@trustetc.com. In the subject line, I want you to put kit if you want the kit. If you want a consult, put consult. And if you want both, put kit plus consult. All right, ladies and gentlemen, I want to thank you for joining our webinar today. I hope you got a ton out of the content and education. I'll also thank Mark, who we had an opportunity to interview, and he provided a ton of great education and information on how to be successful using a self-directed IRA, making over $119,000 in net profit in 16 months. And I also encourage you again to check out our YouTube video and other educational training. Again, John Bowens signing off from Equity Trust Company. Look forward to seeing you on the next webinar.